Trump's tariff timeout sparks market euphoria, but China's still in the crosshairs. President Trump hit pause at least temporarily on his aggressive tariff campaign, announcing a 90-day freeze on reciprocal tariffs for nearly every trading partner except China. The move sent markets surging, with investors breathing a collective sigh of relief. Tariffs on imports, excluding China, will drop to 10%, effective immediately. But for Beijing, the pressure only mounts. China now faces a crushing 125% tariff, up from 100%. Trump also hinted at broader ambitions, eliminating non-tariff barriers like regulatory red tape and initiating negotiations with 75-plus nations. Meanwhile, China is far from backing down. As U.S. buyers start pulling back, Chinese manufacturers say they can't lower prices without going under a sign that this trade battle may still have plenty of rounds left. For American consumers, this pause could mean lower prices at checkout temporarily. But don't expect relief on Chinese goods like electronics and furniture. Businesses remain wary, and global supply chains are still rattled. If this truce turns into a trade treaty, expect a long-term boost. If not, inflation could reignite. Market surge offers breather, but the damage isn't done. Wall Street partied like it was 1999. The Nasdaq roared 12%, the S&P 500 jumped 9.5%, and the Dow leapt 7.9%, making it the best day in years for all three indexes. The catalyst: Trump's tariff U-turn. After last week's brutal sell-off triggered a sell-everything American panic. This reversal gave investors hope. But not all is rosy. Markets are still below pre-announcement levels, and uncertainty continues to loom. Behind the scenes, Fed officials are worried. Newly released minutes show they're concerned tariffs could make inflation more persistent. Interest rates are on pause for now, but the inflation genie is still rattling the bottle. The market rally might boost retirement accounts, consumer confidence, and spending, at least in the short run. But inflation risks and unresolved trade tensions mean economic volatility isn't over. Think of this as a sugar high, not a full recovery. Big brands are buckling under pressure. It's been a tough day for some household names, a breakout the ice cream kind of day. Prada's planned acquisition of Versace is hanging by a thread, as global market turmoil puts luxury deals on ice. WW International, formerly Weight Watchers, is preparing for a potential bankruptcy filing, amid declining demand and the rise of new weight loss drugs like Ozempic. Airlines, once dreaming of record travel seasons, are now grounded by economic uncertainty and sharp cuts in federal travel spending. These stories reflect deeper shifts. Consumer behavior is evolving rapidly, and even legacy brands aren't safe. Budget-conscious travelers, health-conscious dieters, and cautious investors are reshaping the post-COVID economy. If the turbulence continues, expect more corporate shakeups, layoffs, and market consolidations. If you like those updates, please give a thumb up and follow my channel.